Hi, in this video, we will learn the treatment as well as the journal entries to be passed where the issue is oversubscribed. Shares are said to be oversubscribed when the number of shares applied for is greater than the number of shares which is offered for subscription. Since the company cannot allot more shares than what has been issued, the company cannot allot shares to all the applicants in full. Therefore, the company can adopt any of the following alternatives. The first alternative is rejection of shares and refund of application money received. The second option is partial allotment of shares or pro-rata allotment. And the third alternative is a combination of the first and the second alternative. We will understand the treatment and journal entries in each of these alternatives one by one. We'll begin with rejection of shares and refund of the application money received. First alternative, rejection of shares. Some applicants are accepted in full and excess applications are rejected outrightly and their application money is refunded. This is known as rejection of shares. We understand this by means of an example. Let's say A Limited invited applications for 50,000 shares of rupees 10 each, payable as rupees 3 on application, rupees 4 on allotment and rupees 3 on first and final call. Applications were received for 70,000 shares. The company rejected the applications for 20,000 shares and refunded the application money. All the calls were made and the amount was duly received. Now in this example, A Limited has issued only 50,000 shares and has received applications for 70,000 shares. The company cannot allot more than the number of shares which have been issued, which in this case is 50,000 shares. So the company decides to adopt the first alternative. It decides to reject the remaining excess applicants of 20,000 shares and refund the application money which has been received. So let's see how to go about this in terms of journal entries. We have the sum on the top and the journal entries in the bottom half of the screen. The very first journal entry is for the application money received. The company receives application money on 70,000 shares at the rate of rupees 3 per share. Journal entry for the same: bank account debit, 2 share application account, 70,000 shares multiplied by 3 rupees per share, which comes up to rupees 2,10,000. Now in the second entry, we will transfer the application money for the shares allotted, which means for 50,000 shares, the application money at the rate of rupees 3 will be transferred from share application to share capital, and the excess amount which is rejected, 20,000 shares multiplied by 3 rupees, 60,000 rupees, will be refunded. So the journal entry for the same: share application account debit, rupees 2,10,000, 2 share capital account, 50,000 shares multiplied by 3 per share, 1,50,000 rupees, and for the refund of the application money, 2 bank account, 20,000 shares multiplied by 3 rupees per share, which is 60,000 rupees. So the narration is: application money is transferred to share capital for 50,000 shares and the balance has been refunded. Now the other entries can go on as usual. Share allotment money due. It's on 50,000 shares at the rate of rupees 4 per share. Journal entry, share allotment account debit to share capital account, rupees 2 lakh. For receipt of allotment money, bank account debit to share allotment account, 2 lakh rupees. The first and final call money due is share first and final call account debit to share capital. The amount which is due is 50,000 shares multiplied by 3 rupees per share, 1,50,000 rupees. And bank to share final call is also 1,50,000 rupees. So this is the treatment where the company decides to adopt the first alternative, which is rejection of shares and refund of application money received. Let's go on to the second alternative, pro-rata allotment. Now in this alternative, all applicants are allotted shares in proportion, and therefore it's called partial allotment or pro-rata allotment. We'll understand this by means of an example. A Limited invited applications for 50,000 shares of rupees 10 each, payable as rupees 3 on application, rupees 4 on allotment, and rupees 3 on first and final call. Applications were received for 70,000 shares. The company decided to allot shares to all the applicants on pro-rata basis. So this means that for every 7 shares applied by an applicant, the company will allot 5 shares. So each and every applicant will get shares, and for every 7 shares applied by the applicant, the company will allot 5 shares. So in case you are asked which option of oversubscription stresses on equality, then we need to write pro-rata allotment or partial allotment as the answer, because every applicant of shares will get some shares allotted, albeit less than the number of shares applied by that applicant. So in this alternative, the treatment is like this. The company will accept the application money for 70,000 shares, and the application money for 50,000 shares will be transferred to share capital, because that's the number of shares which has been allotted. And the remaining application money, which in this case is 20,000 shares multiplied by 3, rupees 60,000, the company will transfer towards share allotment account. And consequently, at the time of paying the allotment money, since there is already some excess application money transferred to allotment, the amount which has to be paid by the shareholder is the amount due minus the excess application money which was taken towards allotment. So we will see the journal entries for this to understand this better. The first journal entry, for receipt of application money, bank account debit to share application account, 70,000 shares multiplied by 3, 2,10,000 rupees. Now in the second journal entry, to the extent of 1,50,000, which is 50,000 shares multiplied by 3 rupees, we will transfer towards share capital, and the balance excess application money we will transfer towards share allotment account. The journal entry is share application account debit 2,10,000 rupees, to share capital account 1,50,000 rupees, and to share allotment account 60,000 rupees. So the narration, application money transferred to share capital for 50,000 shares, and the balance transferred to share allotment account. Let's make the allotment due share allotment account debit to share capital account. On 50,000 shares at the rate of rupees 4 per share comes up to rupees 2 lakh. Now, on receipt of allotment money, the journal entry bank account debit to share allotment account, the amount due, which is rupees 2 lakh, minus the amount which was transferred from application to allotment in the second entry, 60,000 rupees. This is the amount that we should expect the shareholders to pay, because there's already been some amount from application which has been transferred to allotment, 60,000 rupees. So the amount ultimately paid by them will be 1,40,000 rupees. 2 lakh which is due minus the 60,000 rupees. We can go on and make the final call due share first and final call account debit to share capital, 1,50,000 rupees, which is 3 rupees per share on 50,000 shares, and the receipt of the final call money bank to share final call account, 1,50,000 rupees. So here we learned the journal entries in the second alternative, pro-rata allotment or partial allotment. Next, we need to understand a very important point. What happens when excess application money is still there after adjusting to the allotment money? Now, if the excess application money is so much that even after transferring to the allotment money, there is still some balance left, then what should the company do? Now, the company has two options. We will learn the first option first. The first option is, after adjusting towards the allotment money, the balance will be refunded. So the journal entry at the time of application money received, bank to share application account, and at the time of transfer to allotment and refund of the excess amount, the journal entry share application account debit to share capital account for the application money towards the share allotted, which is transferred to share capital. The excess application money which is transferred to share allotment is to share allotment account, and since there is still some excess application money left, that will be refunded against to bank account. Narration: application money transferred to share allotment account and the balance refunded. So this is one of the options that the company has. Let's understand the second option. In the second option, the company will utilize the amount for allotment money, and since there is excess application money, it will be transferred to the calls as calls in advance. So the journal entry for receipt of application money, bank account debit to share application account for the application money received, and in the second entry we will have share application account debit to share capital account application money on the shares allotted, to share allotment account the excess application money which is transferred to share allotment account, and since there is still excess application money, it will be transferred to calls, and the account is to calls in advance account. The narration: application money transferred to share allotment account and the balance transferred to call. So this is the second option that the company has. Now, please remember this very important note. Entries must be passed as is required by the question. So we need to decide on option 1 or option 2 depending on what the question asks us to do. Now, if the question is silent, or if the question says that excess application money is to be adjusted against share allotment only and balance is to be refunded, then excess application money will not be carried as calls in advance, but it will be refunded. So these are the rules when excess application money is still there after adjusting to allotment money. Let's go on to the third alternative, combination of rejection and pro-rata allotment. A combination of the above two alternatives may be adopted, where some applications are accepted in full, some applications are outrightly rejected, and proportional allotment is made to the remaining. We understand this by means of an example. A Limited invited applications for 50,000 shares of rupees 10 each, payable as rupees 3 on application, rupees 4 on allotment, and rupees 3 on first and final call. Applications were received for 70,000 shares. The company decides as follows. Applications for 20,000 shares are accepted in full. Applications for 10,000 shares are rejected, and the balance applications are allotted on a pro-rata basis in the ratio of 3 shares for every 4 shares applied. Now in this situation, application money is returned to the unsuccessful applicants, that is the applicants of 10,000 shares, and surplus money on the partly allotted shares, that is on the shares on which pro-rata allotment is made, is retained for utilizing this amount due for allotment and the future calls. Now when we are faced with this third alternative, it will be helpful if we understand this table, which I will just explain, and also follow the table, because most of the sums which comes in our examination will be that of forfeiture of shares, and it is easier to solve the sums on forfeiture of shares if we follow this one table. Now if we see this table over here, it has 9 columns. We will go through each column one by one. The column 1, or the first column, is for category. Now this will be as per specified in the sum. If it is not given in the sum, we can choose our category. We can say 1, 2, 3 or A, B, C and so on. The second column is the number of shares applied in that specific category. The column 3 is the number of shares allotted for the shares applied in that category. The fourth column is application money received in that particular category. We need to take the amount of column 2, which is the number of shares applied, multiplied by the application money per share. The fifth column is the application money which is transferred to share capital. For this we need to take the answer of column 3, which gives us the number of shares allotted in that particular category, and multiply it with the application money per share. We will get the answer to column 5. Column 6 is refund of application money. If for any of the categories mentioned, we have a number in column 2 against which it is nil or 0 in column 3, that is no shares are allotted for a certain number of shares applied, in other words rejection of shares happen, then that particular category will have an amount under column 6. for refund of application money, we will take the number of shares applied and multiply it with the application money per share. In other words, the number of shares for which no allotment is done, shares rejected, multiplied by application money per share. The seventh column is the allotment money due, which is the column 3 multiplied by the allotment money per share. 8 is to transfer the excess application money to allotment. For this, we need to take the answer of column 4, which is the application money which we received in that category. And from this amount, we need to subtract the answer of column 5, which is the amount of application money which is transferred to share capital. This will give us the excess application money which we should transfer to allotment and therefore enter it in the 8th column. The column 9 is how much we can expect the shareholder to pay on allotment, which will be the answer of column 7, which is the amount of allotment money due, minus the answer of column 8, which is the amount of excess application which is transferred to allotment. So answer of column 7 minus answer of column 8 will give us the amount for column 9 in that specific category. Let's apply the example sum to this table of 9 columns. First column, category. Second column, number of shares applied. Third, number of shares allotted. Next, application money received. Next column, application transferred to share capital. Refund of application money. Allotment money due. The 8th column is excess application transferred to allotment. And the last column, bank to allotment. This will give us the total of the columns. Let's begin with category A. It says applications for 20,000 shares are accepted in full. So in this category, number of shares applied is 20,000 and the number of shares allotted is also 20,000 shares. Let's go to the second category, B. Applications for 10,000 shares are rejected. So under number of shares applied, I will write 10,000 shares and number of shares allotted is nil because all these shares are rejected. And balance applications are allotted on pro-rata basis. So that is the answer for the category C. We should remember that the total of the number of shares applied column, the applications were received for totally 70,000 shares. And the maximum shares that can be allotted is 50,000 shares. So as balancing figure, we get that for category C, the number of shares applied should be 40,000 shares. And the balancing figure for the same category C for number of shares allotted is 30,000 shares. Now let's go on to the application money received. Amount of application money received per share is rupees 3 So 60,000 rupees, which is this number of shares applied column multiplied by rupees 3. Application transferred to share capital is the number of shares allotted column 20,000 multiplied by 3, which is also 60,000 rupees. There will not be any refund of application money in this case because all the shares applied for has been allotted. In category A, allotment money due is number of shares allotted 20,000 multiplied by 4 rupees, 80,000 rupees. There is no excess application which can be transferred to allotment because the entire application money received of 60,000 has been taken towards share capital. So this would be nil, and therefore the amount for bank to share allotment will be 80,000 minus 0, which is 80,000 rupees. Now let's do the same thing for category B. Application money received is 10,000 shares applied multiplied by 3 rupees, which is 30,000 rupees. No shares are allotted, so the application money transferred to share capital is nil. The entire 30,000 is refund of application money. Since no shares are allotted, allotment money due is 0, excess application transfer to allotment is 0, and the amount payable on allotment bank to allotment is also 0. Now let's follow the same thing for the third category. Application money received is 40,000 shares applied multiplied by 3, which is 1,20,000 rupees. The application money transferred to share capital is 30,000 shares allotted multiplied by 3, which is 90,000 rupees. There will not be any refund of application money in the third category C because the excess application will be taken towards allotment. The allotment money due is 4 rupees per share on the number of shares allotted, which is 30,000 shares. So that comes up to 1,20,000 rupees. The excess application which can be transferred to allotment is the application money received, which is 1,20,000 minus the amount of application which was transferred to share capital, which is 90,000 rupees. So the excess application which we will utilize towards allotment is 30,000 rupees, and the amount a shareholder in category C has to pay on allotment is 1,20,000 allotment money due minus the excess application which is transferred to allotment 30,000. So the amount which is payable by him will be 90,000 rupees. So let's total this up. Total of application money received is 2,10,000 rupees. Amount transferred to share capital 1,50,000 rupees total. Refund of application money total 30,000 rupees. Amount of application money due 2 lakh rupees total. Excess application which is transferred to allotment is 30,000 rupees, and the total of bank to allotment is 80,000 rupees plus 90,000 rupees, which is 1,70,000 rupees. So we've prepared the table. It is very easy for us to pass the journal entries now. Let's go ahead to pass the journal entries. So let's go ahead with the solution and pass the journal entries. We have the table on top, and we'll pass the journal entries in the second half of the screen in the books of A Limited. We have journal, date / serial number, particulars, LF number, debit rupees, as well as credit rupees. First journal entry for application money received, bank account debit to share application account for application money received. To get the amount, we will take the total of the fourth column. The fourth column is application money received, and the total application money received is 2,10,000 rupees. So this will be the answer for the first journal entry, 2,10,000 rupees. We'll move on to the second journal entry, share application account debit. The total share application amount 2,10,000. The amount of the first journal entry, to share capital. The amount of application that is transferred to share capital account is the amount of the fifth column, 1,50,000 rupees. So this is the amount, 1,50,000 rupees to share allotment account. That is the answer of column number 8, excess application which is transferred to allotment. So this is the amount, 30,000 rupees, and to bank account for the amount which has been refunded. It is the answer for column number 6, 30,000 rupees. Narration, application money transferred to share capital and share allotment and balance refunded. Let's go on to the third journal entry. We need to make the allotment money due, share allotment account debit to share capital account. For the allotment money due, this is the answer of the 7th column, 2 lakh rupees. Next journal entry for receipt of allotment money, bank account debit to share allotment account for allotment money received. The amount is the total of the last and final column, the ninth column, which is 1,70,000 rupees. The fifth entry is to make the share final call due. Share final call account debit to share capital account. For final call money due, the amount due 50,000 shares multiplied by final call of rupees 3 per share, 1,50,000 rupees. The final journal entry, sixth entry for receipt of the final call, bank account debit to share final call account. For final call money received, the amount due 1,50,000 rupees has been received. We've completed the journal entries. So we've seen that once the table is prepared, passing the journal entries is extremely simple. I'll remove the split. We can view all the entries together. We have the table at the top. Please remember, this is part of the working notes. The solution is the journal entries. The first part of the journal entries and this is the second part of the journal entries. We need to understand a very important point over here. We've seen that if the application money is in excess even after transferring to allotment, the excess application money based on the requirements of the question will either be refunded or will be transferred to call. So only if the sum specifically says that the excess application money can also be transferred to call, we will transfer to call. Otherwise, we will refund that application money. Now, in case the excess application money is to be transferred to call, please remember, for every call that excess application money is transferred to, we will have 3 additional columns. The first one, which will be the 10th column, is first call money due. The 11th column would be excess application transferred to first call. And the 12th column would be bank to first call. So for every call that the application money excess has been transferred to, there will be 3 additional columns. The first column among the additional columns will be the first call due. The next excess application transferred to first call, and the column 12 will be bank to first call. This will be demonstrated in one of the subsequent videos. So now in this video, we learn the journal entries at the time of oversubscription of shares, the 3 alternatives available, and the journal entries to be passed under each of these 3 alternatives. In the upcoming video, we will solve example sums on the topic of oversubscription of shares.